Hey guys, it's David, your favorite trader, developer, and money-making sidekick. And today, we're breaking down something that could reshape the entire financial world as we know it. President Trump just locked in over $3 trillion in investment deals from the Middle East. He also paused the US-China trade war and helped 2 nuclear countries pull back from the edge of war. And now Bitcoin is trading above 100,000, all while Coinbase just joined the S&P 500. You are literally watching a new era of finance unfold in real time. So grab your coffee because we're diving deep into how all of this happened. Here's why it's important for your portfolio and how I'm investing moving forward. On May 13th, President Trump stood in Saudi Arabia and announced a historic $600 billion investment deal, but it wasn't just about oil. This was a full-blown economic partnership with strategic alignment. Saudi Arabia gave $142 billion for U.S. arms and defense. This is the biggest arms deal in U.S. history. They also gave $20 billion to U.S.-based AI infrastructure through a company called Datava. It's a Saudi company partnering with Silicon Valley for next-gen computing. Think ChatGPT-style language models with military-grade robotics and surveillance networks. They also gave $80 billion invested across companies like Google, Oracle, AMD, Uber, and Salesforce. This includes building new cloud zones, transportation AI, and real-time data ecosystems. $14 billion went to U.S. infrastructure, building roads, ports, smart cities via AECOM and Hill International. $5.8 billion in revitalizing U.S. health and manufacturing sectors, including biotech development in Michigan. $4.8 billion to Boeing and commercial defense aircraft, plus research into next-gen aerospace fuel systems, and $14 billion into GE energy exports, focusing on renewables, smart grid technology, and nuclear alternatives. That's just Saudi Arabia. A couple days later, Trump flew to Qatar and signed another $1.2 trillion agreement for 210 Boeing jets and $38 billion in long-term tech and supply chain logistics partnerships. And then here comes the United Emirates with another $1.4 trillion focusing on defense, digital infrastructure, and rare earth mineral mining contracts with Nevada-based firms, and another $400 billion dedicated to joint US-UAE energy independence strategies. In total, $3.2 trillion pouring into nearly every American sector. This brings the rise to the U.S. petrodollar. In the 1970s, the U.S. and Saudi Arabia generated the petrodollar agreement. Oil had to be traded in U.S. dollars, reinforcing American financial dominance. Now, we are witnessing the evolution of that system, and it's no longer just about oil for dollars. It's now oil for data, defense, and innovation funding the American industries directly. Why does this shift matter? Middle Eastern nations are diversifying their wealth away from oil dependency into long-term technology and defense investments. They're moving their capital into America instead of BRICS or China. This also counters any rising anti-US dollar sentiment or fears of a multipolar world currency system. This is a new era, and let's call it PetroDollar 2.0. It's defined by mutual security, AI dominance, and shared interest in Western-led globalization. So why did the market explode? Well, markets crave these 3 things: stability, transparency, and growth catalysts. Trump delivered all 3. India and Pakistan had a ceasefire brokered quietly behind closed doors. These are 2 nuclear powers, and this de-escalated under 48 hours. US-China tariffs paused and were reduced from 145% down to 30%, and trillions in committed capital across US industries. So after that, the market showed immediate results. The S&P 500 hit historic highs. Dow Jones and NASDAQ all surged across defense, technology, and AI and energy sectors. And then Bitcoin blast past 100,000 as global confidence spikes. While all of this is unfolding, something huge happened in crypto. Coinbase officially joined the S&P 500. So what does that mean? Well, index funds like Vanguard, BlackRock are now forced to buy Coinbase stock. Billions of retirement dollars, your 401k, your pensions, your IRAs are now flowing into crypto indirectly. This solidifies Coinbase as the first major crypto native institution to be recognized by traditional finance professionals. It's not just a startup anymore, it's officially Wall Street certified. Bitcoin hitting 100,000 didn't come from TikTok hype, Reddit threads, it came from ETFs approvals during institutional demand. It also came from sovereign funds like Saudi and the UAE buying indirect exposure to the US, and a flight to hard assets during geopolitical uncertainty. That's wild. What's wild, despite breaking 100K, Google Trends show that the search interest for Bitcoin is low. We're in a phase of quiet accumulation, not retail mania. This is the smart money phase. So how am I personally investing right now? I continue to DCA into the S&P 500, but the majority of my assets are all into Bitcoin, and I'm still buying every single week. The more mainstream it gets, the more valuable it becomes. I also have some short-term treasury bonds that generate a 4.5% yield. This is for stable income and optionality in case of dips. If you want some high conviction stock picks, I would always go for Boeing, Lockheed Martin, GE, and Oracle. These are all going to be great companies to invest in as the money comes in. In the new financial era, well, it is here, and I want exposure on both sides, the traditional economy and the decentralized future. Whether this becomes the golden era or just a short-term sugar rush, the message is clear. Money is moving, alliances are forming, and the dollar is still king. And if you're sitting on the sidelines waiting for the perfect moment, you just might miss it. Smash that like button and subscribe. Drop a comment with your play for this new financial era. And as always, let's learn and grow using crypto and financial wellness together. Peace.